So today I want to spend a few minutes just talking about the analogy of investing in, say, stocks, bonds, mutual funds versus looking at your health insurance spend, whether it be self-insured or fully insured. One thing that's always interesting to us when we meet with employers, if we're going to propose a self-insured solution, most decision makers will immediately ask us, so what's my worst case scenario? And when you think about worst case scenarios becoming self-insured, usually if you have the worst claims year possible, you might spend, say, 20% more in that 12 months compared to if you were fully insured. But the reality is that outcome, it's only going to happen 5% or less of any given year. And with investing, if you think about what's your worst case scenario and your risk, if you're completely invested in stocks, you could lose all your money. But people invest in stocks all the time because they know that when you average it out over, say, 5 or 10 years, you're going to have some years where the market might drop as much as 20%. Some years it goes up 20%. But when it's averaged out, you're almost always going to be better off investing in those types of stocks and vehicles than, say, being in all fixed income. Although fixed income, your risk has gone down, your worst case is not as bad. With self-insured plans, you budget that you're going to have that worst case year 1 out of 10 years, but when you average it out, it's almost a mathematical certainty that you will come out ahead. And when you think about it, being fully insured over those 10 years, what tends to happen in that same really bad claims year is you receive a 20-30% plus increase, and then ultimately your rates don't come back down just because your claims got better. The whole market tends to shadow those higher rates, and it becomes an exponential problem that keeps compounding over those 10 years. So it's always interesting that people that are a lot smarter than me really focus too much on that worst case scenario, when really anybody of all walks of life tend to understand with investing that you're not really trying to time the market. You're not really trying to get to a point where you have zero risk. So we'd encourage employers to think about their healthcare spend the same way. Thank you.